Hello, I'm Martin Smith and this is your UFX Markets Week in Review. Today we'll cover some of the major events of the past week and discuss how they impact the global currency markets. The euro declined against the dollar after US purchasing managers' data and consumer sentiment fell behind forecasts, damping demand for riskier assets. The ECB said it may purchase bond maturities as long as 3 years, and Europe's central bank reported it plans to sterilize bond purchases, removing as much liquidity as it injects, while the Fed announced unsterilized debt purchases, which will increase the nation's money supply. The euro was last trading at 128.56 against the dollar, a decrease of minus 0.43%. The pound declined against the dollar as the United Kingdom faces increasing risk of downgrade to its top credit ratings after Fitch Ratings announced the government debt will peak at a higher level and later than previously predicted. Fitch affirmed Britain's AAA level and kept the nation on a negative outlook, and the ratings company stated it doesn't expect to resolve questions over the top grade until 2014. The British pound was last trading at 161.59 against the US dollar, a decrease of minus 0.46%. The Canadian dollar increased the most in 2 years against the US dollar this quarter after stimulus measures by governments worldwide boosted the advance of stocks and oil, increasing investor demand for high-yielding assets. The Canadian currency advanced this month as the Fed announced a plan for open-ended debt buying to spur economic growth, which would debase the US currency. The Canadian dollar was last trading at 0.9833, an increase of 0.29% against the dollar. In commodities, oil capped the biggest quarterly increase this year on concern that rising tension in the Middle East will disrupt supplies as gasoline increased to a 5-month high. Crude oil gained as the White House stated that President Barack Obama and Israeli President Benjamin Netanyahu are in full agreement on preventing Iran from gaining a nuclear weapon. Oil was last trading at the level of 92.19 a barrel against the US dollar, an increase of 0.37%. Gold fell for the second time in 3 days. The dollar strengthened, decreasing demand for the precious metal as an alternative investment. Gold rallied by 11% this quarter, the biggest gain since June 2010, as the Fed announced additional stimulus measures, heightening concern that inflation will grow and the greenback could decline. Gold was last trading at the level of $1,772 an ounce, a decrease of minus 0.27%. Well, that's all we have time for today. I hope you've enjoyed this week's review and you'll join us next week. Until then, be sure to visit us at ufxmarkets.com for all of your online trading needs. For UFX Markets, I'm Martin Smith. Good luck and happy trading.